Okay, let's talk about charts. Let's talk about fundamentals. Manav Chopra to kickstart the discussion a bit later on. Sarvendra Srivastava will join in to speak about the charts as well. And then we'll, of course, get in Anand Tandon to speak about the fundamentals. But Manav, good afternoon. Thanks so much for joining in. No alarm bells, just that the last 2 days out of the last 3 days, the Nifty bank has shown this tendency to just come off and come off quite rapidly. About 1% on Wednesday, about 1% today. Any trades on either the Nifty bank or the Nifty?
See, specifically, Nifty has been in a very good short-term uptrend, and most importantly, Neeraj, we have seen consecutive 4 weeks of advance. I think last time when we had updated, we were quite clear that we will see a good rally towards the levels of 10,600. Now, this 10,600 is a very important, crucial levels for the markets going forward, and I sense there could be a short-term consolidation that would come into the picture. We have also seen in the past, once the markets have seen a series of rally, either we see a price correction or a time correction. I think looking at the sectorial rotation that is happening in the markets, I sense for the near-term perspective, the markets would trade in a broader range, whereby Nifty will have a positional support on the lower side at 10,400 and a stiff resistance at 10,600 or slightly 10,620 levels. So as long as we trade in this range, I think the trend for the markets remains positive, and I believe that we could also see higher levels in the near term, but not really on the immediate basis, but eventually after a few weeks we could see a breakout on the upside. Whereas for Bank Nifty, the important support for Bank Nifty would be around the levels of 24,700 to 800. I sense that if these levels are held, once the index is falling on the lower side, and if we start resuming on the upside, that could be one of the setups that I'm looking at very closely. So for on the weekly perspective, as long as we hold the previous week's low, which is close to 24,800, I think things are still fine. This is just a corrective decline to the rally that we've seen. So for Bank Nifty, I sense that as long as we don't trade above 25,100, I think the short-term traders can just hold on to their positions or look to re-enter only at the higher levels.
Okay, that's the view coming in on Nifty as well as Bank Nifty. Let's see if this consolidation continues, because next week is going to be very important. The April series expires. Manav, let's talk about individual stocks now. What are the stocks that you're recommending in trade?
Yes, my first buy call is on UBL. Clearly the stock has given a very good breakout on the weekly perspective, and moreover, the stock has bounced from its monthly support levels. The long-term trend for this stock is intact, and a weekly reversal also further confirms that this stock is likely to go to its all-time highs and probably even exceed that. So it's a good risk reward bet even at the current levels. Recommend a buy into this with a stop loss of 1100 for an upside target of 1180. The other pick is Ashokley. We are quite positive on the auto packs, and the kind of outperformance this stock has shown in recent times. This is completely for a short-term momentum play. So keeping that in picture, 150 is a very strong support zone, and after a short-term consolidation, a breakout with volumes definitely indicates much higher levels. So 150 can be a stop on the closing basis, and for the near term, one can maintain a upside target of 165.
Okay, that's the call coming in from Manav Chopra. Remember, Ashok Leyland is also trading at its lifetime high levels. It's been hitting those levels almost every day at day's high, currently trading with gains of nearly 2.3%. Let's get in our fundamental expert, Anand Tandon, market expert, who's joining us on the show now. Hi, Anand. Good afternoon, and thanks a lot for joining us once again on Countdown. Well, it's turning out to be a very, very good day for the IT companies and a bad day for the banking pack. Where do you have more exposure, Anand?
Well, about time, I think. If everything else can be overpriced, I don't see why IT can't be overpriced as well. Clearly, the frontline companies are actually now already doing whatever they are promising to do, and then some, at least as far as the stock prices go. But given the fact that it's still probably a grossly under-owned sector, I wouldn't be very surprised if this sector were to continue to rally, given especially the fact that the rupee is also showing signs of weakness. And there is some chance that after TCS's commentary yesterday, that the BFSI sector may actually start to show some positive surprises in the US.
So So, Anand, wouldn't all of that be the potent ingredients for there being optimism on the space? I'm not saying that the rally would continue, but the BFSI revival in the US or the expansion of the digital services, or for the matter, the rupee depreciating, all of this should augur well for the IT companies, shouldn't it?
Certainly will, and that is probably the reason why you're seeing this kind of rally. All I'm saying is that, most analysts are still somewhat circumspect as to the valuation they should attribute to these cash flows, given that we are still not out of the woods, both in terms of either the volume growth or the fact that, you are still looking at a situation where a lot of the stuff can be automated, and therefore the use of the traditional IT services will continue to decline. I think what you're seeing right now is within that secular degrowth, a bit of a rally because of the fact that we've come through a very tight space where the spend has been fairly constrained, that the demand has been somewhat subdued, and many of the smaller companies have actually done quite well. The larger companies have also built up the capabilities, which is perhaps now beginning to show some fruit.
So Anand, so here's my question. What would lead you to buy into IT, or would nothing lead you to buy into IT? I'm just trying to figure out that, by the time all the cards are open on the table, maybe it is too late, or maybe you believe that, that there might not be a case wherein you would want to buy into IT because there are other pockets available.
Well, actually, I have been personally overweight on IT for a while now. And for a large part of last year that underperformed. Now it has turned around and is doing quite well. I'm in no hurry to get rid of it because I think the market is just about beginning to wake up to the fact that the rest of the sectors will probably not grow as much as they thought it would, and probably IT will do a little better than what was earlier anticipated. So from a portfolio allocation point of view, I would be still overweight IT. Whether there is going to be huge upside from here is the question I was trying to answer. That I think, your market is again running ahead of itself, but it's just the beginning right now as far as IT goes. I think you still have some way to go. The runway is fairly long, even.
Well, that debate will continue whether the valuations are attractive or not, but clearly on YTD basis, we've seen good performance, rather outperformance coming in from the IT stocks. Just want to highlight two stocks. Wockhardt has gone up in the last half an hour of trade, I guess. That's trading now with gains of nearly 3%, or rather 3.6% at day's high. Also something like Wellspin India, that's seen gains of about 10 to 11%. So there has been some bit of buying which is coming into this counter, trading around the levels of 57.4. Well, let's also bring in Sarvendra Srivastav, independent market expert, who joins us to talk on the technicals on the market. Hi, Sarvendra. Good afternoon. What's the view now on Nifty? We've recovered almost 500 to 550 points from the lows that we've seen in the recent past. What should one do around the current levels of 10,550?
Yeah, very good afternoon. Yeah, see, this reversal or this pullback is slightly more than initial expectations. Initial expectations were that we'll pull back towards, say, around 10,300, 10,350 max. So in that sense, I think 200 more points have been added into this pullback. But we also need to keep in mind that the 31st Jan levels are around these levels, which is 10,550, 10,600 was an area where from where we sold off a couple of times earlier as well. Closer to the first week of Feb and later half of Jan. Now this bounce also is finding some difficulty around that resistance area. So the underlying theme remains that the medium or the overall the medium term setups on the index would be slightly negative as long as we stay below this 31st Jan price area, and there's a bearish gap also at around 10,700 on the Nifty. So I would say that 10,550, 10,600 thereabouts would be a hurdle going forward immediately on an immediate basis, and there would be a trading range between 10,350 to say around 10,550. So broadly we are at the upper end of this range, and my sense is that we should drift lower now. So we should drift lower 150 to 200 points, and with that strategy in mind, what I would recommend on the Nifty is buying the 10,500 put at around 85, 86 rupees, and look to buy that for a target of around 180 on the upside, and keeping a stop loss there at 44 is what I would recommend on the Nifty.
What about specific stocks, Sarvendra? Good afternoon.
Good afternoon, Neeraj. See, one defensive name and two names on the sell side is what I would go with. As I said, assuming that there would be a 150 point drift lower on the Nifty. So a buy on ITC, I think this one has not performed when the entire PS had all the IT space has started to move now. HUL was already moving. So I think time for ITC now. Look to buy for a target of around 289, 290 for ITC going forward. These are spot levels, mind you. 274.40 is where I would put a stop loss, and these are all trading views that we have got today. The remaining two trades are on the sell side. First one being on DHFL, where I think the levels would have changed a little bit. So a sell on DHFL at around 585, 587 range, a sell there for a target of around 575 on the downside, keeping a stop loss at 596.60 for DHFL on spot. And the last one is a sell on Arvind, where we believe that a medium-term distribution top is in place, and we've already completed the pattern. Now we should drift lower. Look to short sell for a target around 410 going forward next couple of sessions, and keeping a stop loss there at 426.60.
Okay. Today what's unraveled, of course, is the NBFCs and banks. So all of these have come off, and Reliance is down about a couple of percentage points. And then this sharp resurgence in the bond yields, despite a clutch of efforts that the Reserve Bank put in, right? Some 5 or 6 things that the Reserve Bank did when the yields first touched about 7.75, 7.8, and then around the policy we went down to 7.18, back to these levels. While I know it's difficult to figure out what the yields could do, and a lot of people believe that the RBI will intervene, but to the resultant impact of such yield levels on the NBFCs, select banking names as well, do they play a material part in your investment decision into banks and NBFCs?
Well, certainly it will affect, right? If the cost of your raw material goes up, it will make a difference. The only problem is that the supply is not enough. So, it is not as if the banks are able to lend, at least the public sector ones. Whatever was anticipated in the form that, the new capital that the government was willing to put in would go towards at least some level of growth is now vanished. It will continue to remain with the banks in cleaning up their balance sheet. And despite that, they will not be able to lend. More importantly, from whatever I understand anecdotally, it appears that they are in no mood to lend either, because nobody in the public sector bank space is in any position or has any desire to make any decisions. And therefore, the lending portfolio will continue to drag. So that's a space that is not in the market, which means that you are pretty much left with the NBFCs and the private sector banks when it comes to lending. So the demand side of it, so long as it remains robust, I think you will continue to find growth happening in this. Despite that, I would argue that it's an over-owned, overpriced, and probably highly risky space. So I wouldn't be recommending that any fresh money be put into that side. If you have to take a view where you have to go where the puck is going to be, which means that you are betting on the fact that there will be a revival in the economy maybe 6 months, 12 months down the road, especially on the industrial and domestic side. And therefore the corporate facing banks, which have still some chance of coming out and starting to lend, like for example State Bank, would be probably a better, safer bet at this stage.
Okay. By the way, some stocks, Chambal Fertilizers up 6%. That's in the list of the 52-week high stocks. There is, of course, Radico Khaitan doing well, and Cyient from amongst the mid-cap IT pockets up about 12.5%, and that stock is really revving up in trade today. Good going here for Cyient today, 726 and counting, good results, and it's showing in the way the stock is reacting. 12% higher for Cyient, really good going. And then the whole distillery stroke liquor space, maybe due to lower molasses cost, maybe a couple of other factors, but is buzzing. What are your thoughts here? Do you like anything out here? I mean, but tier 1 is easy. A lot of people like them, but those are institutional investors, the likes of United Spirits and United Breweries. But the others have taken center stage in terms of percentage moves. I mean, the Radico, the Pioneer Distilleries, Som Distilleries, a couple of others. Do you like anything in this pocket?
As a theme overall, should you be in things which are habit creating? The answer is yes, because that is something which people, if they have a habit, are unlikely to be able to shake it, whether it is alcohol or cigarettes. it generally gives you very good cash flows. The immediate trigger you already mentioned. What I don't like is the pricing for most of them, because many of these companies have to deal with will continue to have corporate governance issues. The bigger ones are slowly finding their way out of it. But given the fact that the distribution in every state is controlled by the state, it is impossible to actually get out of it completely. And in that case, you are still left with trying to figure out, what will be the reported number, irrespective of what the business looks like. So the short answer is it's going to be a space that may show earnings. If the promoters decide to show earnings, it is definitely a place you want to be. Overall, in my portfolio, it will remain a very small part.
Okay, that's the view coming in on the liquor stocks. Pull up the intraday chart of Bata India. That surged almost 4%, and it's also inching very closer to its 52-week high mark. Look at that intraday chart. It was just about flat for majority of the session. Just in the last 15 to 20 minutes of trade, you're seeing those gains coming in for Bata India. Manav, on the charts, is it indicating any sort of fresh breakout, considering the stock is also moving very closer to its 52-week high mark?
Absolutely. In fact, you said it, after a short-term consolidation, the kind of a breakout that we've seen into the stock with volumes, the stock is likely to move much higher from here on. In fact, even when we look at the weekly perspective, the trend is definitely positive, and moreover, a breakout on a decisive close on a weekly basis above 790 will definitely confirm further upside into this. I suggest one can definitely look to buy into this or wait for an intraday dip towards 795, which is its important support on the 30 minutes chart. So keep a stop loss of 785 for a short-term positional. You could see levels of 825 to 840.
Okay, you can expect levels of 825 to almost 840 on the upside, and that's a buy call coming in from Manav on Bata India. Anand, are you buying the hotel story, where there are reports indicating that the occupancy rates have been going higher? In fact, we've seen the hotel stocks inching higher in the last few sessions. Today particularly, we've seen the new listing, not today new listing, but a company which got listed recently, that's Lemon Tree, that's also surged in trade. Anything from this space that's exciting you?
Certainly one of the turnaround sectors. I'm not so sure that the demand supply gap is narrowed very considerably, but it does seem to have definitely improved. And like every other business which is capacity based, as the utilization improves, the margins and top line both improve because of the fact that you're able to price higher. And it does look like we are getting into that cycle. So it's still somewhat early days, though many of the stocks have actually doubled already. But that said, I think again, somewhat under-owned, ignored sector. Within the consumption theme, probably one of the better plays.
Anand, my final question to you today, I'm not asking you to comment on a buy, sell or a hold idea, but if you have any thoughts on what's happening around with Max. I think when we were talking to experts about what to do with hospital chains and insurance companies, both the pockets, I think that one name that came out yesterday was that while everybody's looking at HDFC Life or ICICI or others, this gentleman was very bullish on Max Financial. He thought that the market is overpricing the risks and the delays that could happen into deals, so on and so forth. The stock has given a bit of a move today. Any thoughts here on the business?
So Max Financial has actually had one of the best agency businesses in the market. And clearly it would have done very well, except for the issue that we have about the bank assurance. Now, it's not a small risk, and I don't know how to price it, because if half your revenues come from Axis Bank, and if there is some reason to assume that that could change, you will, I don't know how you'll be able to replace that, no matter what other company go out and buy. So it's a risk which is very real and which is very difficult to figure out. However, as I said, the valuations have reached a level where, it was hardly 1.1 time the embedded value 2 years out, as opposed to, 2 to 3 times all the others. So clearly from a valuation perspective, it was the cheapest out there, assuming business as usual. And given the fact that Axis Bank agreement lasts for at least, I think, up to 2021, if you assume that, they'll be able to pull through there and have some other alternative measures if it were to create a problem later on, I think it was at a value stage, definitely. From a business perspective, I don't see that company having a problem at all, other than the distribution.
All right, Anand, thanks a lot for joining us. We'll leave it on that note. Well, that was unintended market expert giving his commentary on the IT pack and also the liquor pack. But let's switch focus and talk about the currency market. That too has been in focus. And in fact, let's look at the chart of the day. The Indian rupee has become the second worst performing Asian currency. Saloni Dhanuka joins us with more details. Saloni?
Navneet correctly said Indian rupee has become the second worst performing Asian currency so far in this year by losing as much as 3% against the dollar. As you can see here, the worst performing currency on a year-to-date basis is Philippine peso and the second worst is Indian rupee. Now, for the month of April alone, rupee has weakened a little over 1% against the dollar and has become the worst performing Asian currency for the month of April. Now, there could be more pain in the store if seasonality is to go by. Now, if you see in the last 5 years, rupee has gained only once in the month of May and June. Now, however, this may not last as the Bloomberg consensus estimates that the rupee will turn out to be the best performing currency by the end of calendar year 2018, as indicated here, by gaining approximately 1.9% against the dollar. Now, analysts are estimating Chinese renminbi and Japanese yen to be the worst performing Asian currencies by the end of this year, Navneet.
Okay, Saloni, thanks a lot for bringing in all those details with regard to the Indian rupee, which has not been performing well. Remember, we highlighted that the bond yields in the morning also went up quite sharply. Well, let's now take a look at our special segment called Snapshots, which brings you some of the key highlights during the day so far.
Mahindra CI definitely, could be looked upon from a longer-term horizon, considering that they have a global customer reach. They are not only present in the domestic market, but they have a larger exposure in the European and the US market. So, Neeraj, I think if one were to take a longer-term exposure, I would believe that Jamna Auto is largely dependent on the domestic commercial vehicle players. But Mahindra CI has a bigger kind of product basket. So, I think longer-term, I think we could see a bigger risk reward here. I mean, my sense is Mahindra CI anywhere below, say, 250, 260 could be a good call to look at.
I would say that these are levels at which we've seen previous interventions by the government and the RBI. I don't think they're comfortable with yields threatening to breach 8% on the 10-year. So I expect that yields will get capped out very close to current levels. Having said that, I maintain the fact that these are not levels which we are choosing to add on in any structural way. We think that the most of the money is to be made in the short end of the yield curve and especially in corporate bonds.
If you put two offers to the shareholders, neither one gains. It's always easier for shareholders to decline one offer and then go with the other. Otherwise, there's bound to be a split vote, and it doesn't lead to either party getting any winning or one losing. However, your question on which bid I would go for, I mean, I think that's quite a biased question, because at the end of the day, the committee and the board has to look at all the stakeholders, as mentioned, and not only on the valuation of a future potential valuation if you put 5 people to do due diligence. If I had a choice, I would have to, if I was a shareholder, I would have to go with what's on the table now and not some future possibility.
I don't see it going down further, because definitely a natural phenomenon will kick in, and in summer seasons the production will go down slightly. Maybe it's not now, but as the mercury rises in May, June, the production might go down. Number 2 is what happens is post June, July, festive season also starts kicking in. The Shravan month, then there is a lot of festival which starts coming in, right from various festivals in Shravan to Rakhi to Dashera and to Diwali. So all this festival season, particularly the demand for dairy products is high. So considering both these factors, even if the supply side is constant, there is definitely going to be a demand side rise, and hence I don't see prices going down any further from this level right now.
Fact remains that this has given them an opportunity, because you have a player in Russia which is sort of which was impacted, which is why you saw aluminium prices go up. I think the deficit from China is likely to continue, even if that situation gets resolved. And I think to back it up with what Mr. Chokalingam is saying, that I'm seeing a good upside for aluminium going ahead, because increasingly data seems to suggest that more and more people are using aluminium for things that they didn't use earlier. So I think yes, perhaps not the fundamentals of NALCO specifically, but I think the entire sector will see good buying going ahead. And in fact, my recommendation has been Hindalco in that space.
Okay.
But yes, I think I like NALCO.
Well, those are the key highlights that came about on Bloomberg Quint through the day. Time for a short break here on Countdown. Remember, on the other side, when we come back, we'll tell you all about the Fab 4 stocks of the day. At 3:15 p.m., we'll tell you what dealing rooms are recommending in the session today. And about 3:20, we'll also get you some closing strategies from both our experts, Manav Chopra as well as Sarvendra Srivastava. Stay tuned to Bloomberg Quint. Back with Countdown right here on Bloomberg Quint. About 30 minutes to go before the market shuts shop. We are placed marginally in the red for the key benchmark indices, though the Nifty Bank is down about 1%. But it's been this way now for the last 1 hour. The global markets, they're doing okay. Mixed bag, really. FTSE marginally in the green, but CAC and DAX slightly off in the red. So no great cues coming in. But you would expect for a week, if we can have the Nifty week chart on the wall as well, or just pull up the Nifty 5-day chart, you will see that we've had a reasonable amount of success this week. So on a day when we're ending or having 5 days of, or almost 5 days of gain, when the MPC minutes have been hawkish and the bond yields have shot up, you wouldn't expect a dramatic pull up and carrying on into the weekend as well. So, I think this is probably par for the course. It's not disappointing at all that we have a close like this. 10,547 is pretty good, really. The question mark only is, if you are a Nifty trader, should you carry home the long positions if you have them? Before we get in, Sumit Sarkar with the Fab 4 stocks of the day. Manav Chopra, just one word. You gave us a Nifty and a Nifty Bank view, but if you were already long on the index, would you carry home the long positions into the weekend?
No, actually, this will be the best time to book profits, because since we are into a consolidation phase, I think the best time would be to buy near the support levels, and so we would be at the mid level. So at 10,550, I think one should book profits. Come next week, if you get Nifty around the levels of 10,500 or 450, try and re-enter at lower levels.
Okay. Let's tell you what's lined up on Fab 4. It's 3 p.m. So that time of the show when we get you the Fab 4 stocks of the day. Sumit Sarkar joins in today to speak about what's made to his list on the Fab 4. Sumit.
So on Fab 4 today, first on the list is Kakatiya Cement. Now this is a south-based cement company which has hit an upper circuit of 20% after it announced that they have resumed operations at one of its cement plant in Telangana. Second on the list is Mindtree. Now this stock is up for the second straight session after it announced a strong Q4 earnings. Trading volumes are over 5 times its 20-day average today. Third on the list is Jamna Auto. Now KR Choksi came out with a sales note which suggested that the company will be the biggest beneficiary of a turnaround in the commercial vehicle space. The note had a buy rating with a target price of 112 on Jamna Auto. Last on the list is Radico Khaitan. Now MK Global came out with a note which suggested that the company's net profit in the fourth quarter of financial year 2018 is expected to jump 55%, and the company can also see a faster debt reduction. And on the back of that, the stock has gained more than 3% today.
Okay, Sumit, thanks a lot for bringing those Fab 4 stocks of the day. Let's see if we close around the current levels for Nifty in today's session. This could just be the fourth straight week of gains coming in for Nifty. 10,552 is the current level where Nifty is trading. Just pull up the chart of L&T Finance Holdings. That's seen a cut of nearly 3.5 to 4%. Remember, Neeraj was mentioning the NBFCs are under pressure, reason being the bond yields have been inching higher. Sarvendra, coming very quickly here on the charts. L&T Finance Holdings, would you initiate any position?
I think you'll want it to let it cool off a little bit. I think these are early days into this correction, small little correction possible. another. I think another around 4 or 5% is still possible here, and probably there then the risk rewards probably turn a little bullish. So I would wait out and see as to what happens next week, because Bank Nifty itself is giving a weekly negative close this time around. So the weakness on the financial space could probably continue into the next week as well. So let's I think we should be viewing that Monday, Tuesday, and if the weakness remains, then you don't want to touch it. But if things settle down, then around 5%, 4% lower, I think L&T Finance would be a good buy-side risk reward.
Okay. Let's get in Deepak Shinoy, founder at Capital Mind, joins us right now on the show. And Deepak, interestingly, by the way, Deepak, before I get to the discussion, I must tell you that after our conversation on air, we tried to get in touch with the management of Talwakars. They said that they will speak only once the new company is listed. Until then, they didn't want to talk about it, because I was going to ask them about a bunch of things that you raised in your article as well. Unfortunately, haven't been able to get in touch with them in that sense. But I want to start off, Deepak, with something that you wrote about on 5th March, which is about the companies under NCLT. And it is something that we discussed about 2 or 3 days back with a bunch of experts. Post the Electro Steel ruling came out, and I think the Electro Steel ruling firmly laid out that if you're an equity shareholder who is waiting or thinking that let me punt because the price might be higher once the resolution plan is out, there was a rude shock or cold water poured on your hopes. And now the market is realizing that with the stock prices of Monet and Bhushan doing what they are over the last 3 sessions.
Yes, Neeraj. In fact, I think what's happened is we've had a bit of a moral hazard in the past where, all the CDR issues and, Professor Sanjay Bakshi also tweeted recently that Wokhart was one of those examples where, debt holders took a big hit when the resolution of Wokhart happened. But at the same time, equity holders didn't take any hit. So the debt holders took a hit, but they didn't convert their haircuts into equity. And that has given people a lot of hope that when the debt write-offs happen in NCLT companies, that equity holders will be fine. And worldwide, they're never fine. The idea of debt resolution is that you can't pay anything, the company is bankrupt, the debt holders now own the company. Effectively, they should be at least 100% shareholders of the company, and the current equity is wiped off. That would be a traditional bankruptcy. In the NCLT companies, all of them may actually recover if you remove the debt. Because one of the reasons why they came down was because of debt, not because of fraud or anything else, but they're too high debt levels. So now a new owner can come and take the assets at a much lower debt level, perhaps convert it into a much better performing assets. A 500 crore market cap company can now become an 8,000 crore market cap company. But if you're reduced as a shareholder today to less than 1% of this company, all of today's shareholders together are less than 1% of this company, then an 8,000 market cap for you, crore market cap for you is just a 1% ownership of it, which is 80 crores. Today's market cap of 500 crores will whittle down to 80 crores if the market cap goes to that high. So I think that is a shock that has come to as a realization to equity holders, and I think it was a little late, but I hope that people realize these are not easy stocks to trade.
Well, rightly said, Deepak. These are not the easy stocks to trade into, and for the traders who were looking for a short-term punt, you got to see in Electro Steels what exactly happens. Deepak, talking about the IT pack now, that's the one which has actually supported the markets, or else we would have seen deeper cuts coming in for Nifty in today's session. Is there anything in that pack that you've already bought, or are you looking to buy now at these levels?
We are actually looking quite deeply into some of the mid-cap IT pack. We've been long Mindtree, we've been long a bunch of other smaller IT companies as well. We're not long any of the large players. We feel that the growth in the larger players are probably going to be restricted to 10 to 15%, whereas the smaller players have a much bigger room to grow. The dollar is helping. It's at 66 now, so they will realize slightly better margins. There's been a bit of a consolidation in the industry, very small amount, so I'm expecting more. Perhaps you'll hear of acquisitions soon within this space as well. I think, after 3 or 4 years, you're finally starting to see a point where some of them might actually improve. So we're buying selectively, not taking names because we continue to buy. But I think mid-cap IT is where the action is going to be.
Okay, some news bits. Avanti Feeds going to consider a stock split in a bonus issue on the May 9th, and the stock has just gone up in trade. Remember, none of these really do any dramatic change to your wealth in Avanti Feeds if you're a shareholder. But, well, the market loves these things, and the stock is up about 6.5%, 7%. Difficult to even ask our technical experts about whether or not to trade this because you don't quite know what's the reason why the stock has done what it has done. Nevertheless, the stock is doing okay for itself. Deepak, I'm just, I don't know whether you have opinion on some of these or no, but I'm just shooting out of the dark at you because these stocks are consistently popping on the trading screen the last few days. A clutch of fertilizer names, including Champal Fertilizers, a clutch of auto component names, predominantly Jamna Auto out there, but some of the others too. So I don't know what liberty you have on speaking stocks or not, but the fertilizer pack or some of the auto component names, CV focused in particular. Any thoughts that you have?
We actually own some of them, so I'm not going to name a lot. Jamna is actually very exciting. We don't own it, unfortunately. They have a 76% market share in Indian, the leaf springs industry. So a very, very interesting company. Maybe a little highly priced right now, but as a very interesting, it literally owns so much market share that you can't ignore it if you're a CV player manufacturer. They have literally tie-ups with everybody from Eicher to Eicher Volvo to Tata Motors to Leyland and so on. So I think the interesting thing is the move in the commercial vehicle space in general. And a number of auto component players in that space have started to move up. With more roads, the general theory is that commercial vehicles should do well, but also commercial vehicles have gone down tremendously in terms of sales recently. So we are seeing a revival of some sort there. So I think for the next 3 or 4 years, at least, some of the more entrenched players should continue to do well. I would still avoid players that will get completely beaten up if CVs turn to electric motors, electric vehicles. So you want to avoid the engine plays, the spark plug plays, and so on. But leaf springs, suspensions, axles, tires, I think these are all fantastic plays. We own a number of them, so I'm biased in that respect.
Okay, that's the view on the auto and space, and just want to
310s. I was wondering, yes, Navneet, if there's a list of stocks. Yeah, let's do that first, then we'll mark some of the other names. But 310, so that time of the show, when we tell you what stocks could get into the ban or come out of the F&O ban, the list has expanded, Navneet, quite a lot compared to what we've seen in the last 1 month.
I think we've got almost 6 stocks now which are there in the F&O ban, but next week is also the expiry week, so we could see more of stocks coming out of the F&O ban. But one stock, Dewan Housing, that's been very close to that limit of 95% mark in the last 2 to 3 trading session. If you look at the total open interest as a percentage of market-wide position limit, yesterday was 92.5%. For a stock to enter into the F&O ban, it has to breach the 95% mark. Looks like for Monday's session, it could likely hit that mark, so watch out for Dewan Housing. The other one which could come out and is very, very close to breaching the 80% mark on the lower side is IRB Infra. This too entered into the F&O ban few days back, so watch out for this one. IRB Infra was quite active, I guess, 5 to 6 days back.
Okay, so do watch out for both of these names. Interesting ones at that. Let's see if there is some movement thereof. As we speak, in the last few minutes of trade, Coal India, surprise, surprise, has had this really sharp surge. Bring that one up. Look at that big move there in Coal India. On the Nifty 50, this is the one which is really surged in trade. And then if I look at the Nifty 500, stocks like Shriram City, Motherson Sumi, and Parag Milk Foods has continued to gain. It's just gone one way, and that is up. And this is probably the 5th straight day of gains, and it is starting to move up even further. So another 3% for Parag Milk. That's about 296 or 297. Deepak, a lot of people are getting enamored by this milk and dairy space with this whole belief of unorganized to organized and people turning to branded products versus the unbranded products. Try hard as I might, I don't know if these are companies that will deliver a CAGR, northwards of 15% growth rate. The commodity doesn't lend itself to do that, but I might be wrong here. Have you guys had a chance to analyze some of the milk names, and if so, what is your thesis here?
Yeah, we actually did a couple of articles on it as well, but we are long Parag, so in that way we are biased. But one of the things that's happening here is the milk industry is a complete waste of time, to be honest. It's 90%, it's a very, very low margin business, and there is extreme amount of wastage. I mean, you can't store this stuff, and we don't have the refrigeration. Refrigeration is costly as well, and there's a lot of spoilage. So what happens is they just, make it milk powder and then, try to sell it at whatever price they can. And worldwide milk product prices are very low. So there's, the milk itself is not the exciting thing. The value-added products have much higher margins, but they have to be treated like FMCG. Milk, on the other hand, is typically a negative free cash flow. Negative cash outflow business. And typically, they get the money first, and then they have to pay out to farmers a little bit later. Whereas an FMCG business like cheese will actually require you to give credit to your suppliers and your customers. So it's a little bit more complex, but the cheese market in India is a very, very small nascent. The biggest player is Amul. Parag, I think, is the second biggest with its Go Cheese brand. I think that is what makes that particular company exciting. And it does have a milk franchise. Milk still controls a tremendous amount of its business, but the value-added product market is where I think a company like Parag, which has already got a brand in place, might succeed. There are other players as well. There's Hatson Agro. They're very expensive. Heritage also is, again, good player, very expensive, great command in the milk space. We will find that these are territorial plays. So they will be in one territory and they will be 100% of that territory. But they'll find it difficult to move into new territories on the milk front. Hatson's moving into ice cream, so is Heritage. That's an interesting market, and now it's hot and summer, so all of them will kind of do well. We're avoiding quality for lots of other reasons beyond the milk and the other businesses. But Hatson and Heritage, if they were half the prices they are right now, I think they'd be good buys. But Parag seems to be in a much better place from a price and a risk perspective, so we're long that.
Okay, that's the view coming in on the milk space. I just want to pull up SKM Egg Products Exports India Limited. That's the counter which is locked in upper circuit with gains of 20%. Something which has just gone up in the last 15 minutes of trade is also Kaya. If we can just pull up that counter, Kaya Limited has seen gains of almost 11 to 12%. Pull up the intraday chart of that one and you'll see how when it just went up actually in the last 10 minutes of trade, and also the volumes compared to yesterday's have been quite high for Kaya. Well, it's time to take a look at what the dealing rooms are recommending in trade today. Yatin Mota joins us with his channel checks. Hi Yatin, good afternoon.
Thanks for that, Navneet. And starting with Cyient, and in general, IT stocks are doing well, be it large cap IT, small cap IT, mid cap IT, everything is doing well. That stock is up 10%, and dealers still indicate even from these levels, IT stocks, especially the likes of Cyient, should be bought for short-term trading gains. Sun TV, that is one stock which is weak in trade, and dealers do indicate that one STBT strategy can be done, which is sell today, buy tomorrow. Probably they are expecting some bit of trading weakness as far as this media stock is concerned. And do watch out for Godfrey Phillips. That is one stock, on the back of HNI action, has been looking at some good traction. Of course, the volumes are not very high, but dealers do believe that HNIs are accumulating the stock at every lower levels.
Okay, very interesting. Godfrey Phillips, I wonder why, but thanks a lot for that, Yatin. Any reason as to why dealers would be recommending their HNIs, or HNIs themselves would be buying a stock like Godfrey Phillips?
Neeraj, if you look at ITC, it gave a good move 2 days back, and in general, the channel checks are suggesting that tobacco stocks and cigarette consumption is again picking up, from the problems and the taxation that we saw, the recent price hikes. Probably the market is now started absorbing it, and checks are indicating that cigarette consumption, tobacco consumption has improved, and overall consumption is picking up. Of course, we spoke with a couple of FMCG companies also, and they were talking about double-digit growth there. So probably tobacco is one space which is looking at some green shoots. Probably too early to say, but initial checks are suggesting analysts that tobacco as a product is picking up despite all the price hikes that have happened in the last few quarters.
Okay, thanks a lot for that, Yatin. As we speak, the Nifty Bank has come up a little bit from the lows of the day, and that's resulted in the Nifty breaking even. We're in the green for the Nifty. So, well, that's a bit of a late hour buying phenomenon that we are used to. The Sensex about to break into the green as well. And I tell you, the big boy, and I'm referring to TCS, is at 3409. Remember, it's 3447, right? 3447. Wherein we have TCS breaking into the $100 billion mark. That's quite an achievement, to be honest. It's just taken up all the other IT companies along with it as well. Just a question, Sarvendra. If somebody was long on TCS this morning, because he believed that the stock could gain, if you had entered into a long this morning into TCS, would you carry home the long position, Sarvendra?
Oh yes, absolutely. I think the way the rupee has behaved and the way the entire IT space is moving, I think still more headroom there. And when we used to do your weekend shows, the Nifty IT index, we had called the bottom at around 93, 9400, and what we have believed from that point in time that this is only one sector probably which will keep on moving and be outperforming the markets as a whole. So I think that longer term move is now clearly visible to everybody else as well. And on that long term setups or on those long term channels, I think still more to go. There's still 15 to 20% more upside on the NSE Nifty IT index itself. So I think TCS definitely will be a major part of that percentage move as well. So I would not be surprised if this reaches 37, 3800 over the next quarter, 2 quarters. So I would definitely carry the positions, and IT would be a space where we'll be keeping on putting long trades a time.
Well, that's interesting. Manav, which is the best IT stock to take home? I mean, TCS is arguably the one which is right up at the top of the heap, but the others too, all the 4 or 5 large caps, a clutch of mid caps, everybody is participating. Which is the best chart?
See, at the current levels, Tech Mahindra definitely looks good because it's all about the important play with the risk reward, and it has already given a breakout after 4 days of consolidation. So I think there is some more leg rooms on the upside and some more rally to see on in Tech Mahindra. And more importantly, this stock has been forming higher bottoms on the weekly charts since last 4 to 6 weeks. So I believe even at the current levels, keeping a strong support which is at 680 on the lower side, this can be bought even for a short-term trading perspective. 680 could be your trail stop loss for your long positions, and eventually you could see the levels of 735 in a very short term.
Okay, just 10 minutes to go for markets to close. Let's get you the top trading strategy from our experts. So Manav, I'll come back to you. Any BTST or STBT for Monday?
Yes, at the current levels, looking at the form that the IT index is in, I like to recommend a mid-cap IT stock, which is NIT Limited. The stock has, after 9 days of decline, has given a breakout today with volumes. So, looking at the overall formation of the NIT Limited, it is quite positive also on the weekly perspective. So, completely for a momentum play, keep a stop loss of 105 for an immediate upside target of 115, and also one can trail it for a positional upside target of 120.
Sarvendra, what about you?
I'll go with a BTST kind of a trade on MFSL, which is Max Financials. I think clearly the way it is closing for the week, that's a very nice bullish weekly reversal, which has engulfed the last 5-6 bars on the weekly chart. So almost a 5 week kind of a bullish engulfing is what we are putting in for Max. Volumes have been decent, and for the week much higher than what the stock was doing last many weeks. I think this is one of the highest weekly volumes in the last 6-8 months. So the stock could carry on the good work, and we should look for targets in the region of 500, 510 going forward next week. So the trade could well pan out for the whole week itself, where you reach those targets. But only for Monday, if someone has to take, then I think 485 is what I would put as a target, and I would say that keep a stop loss there at below 472 for Monday.
It's pertinent to point out some losers as well. Everready continues to grind lower. That's down about 11% on that order. And the PSU banks have really unraveled. I mean, they were hardly getting a chance to come back into the fray. And PAT, the bond yields going up, has led to all of these going down. Can Bank, BOI, Andhra Bank, Union Bank, Allahabad Bank, a clutch of these names have just fallen off by the wayside. The preference is becoming even more stark, Deepak. The rally that we've seen in the last 20 days in a Kotak Bank and HDFC Bank, maybe some of the others too, and every rally into some of PSU Bank being sold into due to fundamental triggers or otherwise. What do you do now, Deepak? I mean, let's say there are people who have suddenly found some confidence because the market has come back from that 9800 mark. Okay, my camera is playing tricks out here. But let's say people have found some confidence and want to park their money into a banking pocket. PSU banks, expensive private banks, or the slightly inexpensive corporate-facing banks, or the mid-sized banks. What do you choose?
I think I do a combination perhaps here. I mean, in the larger banks or private banks, there's HDFC, IndusInd that continue to be, I guess, attractive. So the Kotak is also okay. It's we'll have to see after results this time. But you look at smaller banks like City Union or DCB, the smaller private banks, very interesting. DCB's results were very good this time. And, that's also something that you can say they've kind of skirted the issue. Within public sector banks also, there are some banks which have outperformed in terms of not having the kind of corporate exposure that the others do. I think public sector banks are going to hurt because every NCLT resolution involves more than a 50% haircut. Means they're going to take additional provisions and additional hit on their portfolio in this quarter. And I think there are 6 resolutions out there that's probably going to happen in the next 3 or 4 weeks. So obviously there's some level of concern, and the RBI circular and the fact that so many people are saying that's going to be really bad for the banking system means results are going to be pretty lousy as well. So I wouldn't right now venture into most of the public sector banks, but as a disclosure, we're buying one of them. I'm not naming it because it kind of will not pass compliance. But what will happen, I think, is once this is over, we'll get to know the real book values of banks, we'll get to know their real book value multiples, and whether they do or do not need more capital to shore up their reserves in terms of the CAR and so on. So that I think will determine which one is good to buy. At this point, if you're risk averse, just avoid banks completely. Industrials are doing far better.
Avoid banks, but as of now, there's been a sharp recovery that we've seen for Bank Nifty. It's back above the 25,000 mark. And remember, the recovery that we've seen is being led by the heavyweight HDFC Bank. I guess that's the sole one in the Nifty Private Banking Index currently, which is trading with gains of almost 1%. And it has maximum weightage on Nifty as well. The other stock I just want to pull up is Kaya. It's had a terrific week, so to say. Last week, it closed somewhere about 980, and today we're seeing rates of above 1200 for Kaya. Manav, come in here on the charts. Kaya this week has seen gains of nearly 22 to 23%. What can we expect rather more upside from the current levels of 1207?
In fact, the stock was trying to form a series of higher bottom, and after a consolidation, we have witnessed a very sharp rally in last 4 days, accompanied by good volume. So a breakout with volumes, we expect this rally to continue on the upside. So moreover, even looking at the risk reward ratio basis, I think one should not really get on to it even at the current levels. One can look on and wait for some short-term dip. The important immediate support for this stock is close to the levels of 1190, and I believe in case if you get this on the intraday basis, one can enter into this with a positional stop of 1150 and probably ride this stock. Eventually, the formation suggests a good rounding formation and a possibility of this stock to see a good upside of at least 15% from the current level. So the target of 1300 to 1350 is very much on cards.
Well, the other stock from the broader markets which has gone up is Agrotech Foods. Let's just pull up that one as well. That's seen gains of nearly 8 to 9% in today's session. So there are some individual stocks in broader markets which continue to do well. Agrotech there on your screen around the mark of 781. Just 3 minutes to go for markets to close. Let's head across to Neeraj to find out how exactly today's closing is panning out. And Neeraj, it's Friday. Off day is low, a good sign. We'll get across to Neeraj, but we've seen the Nifty bank. I just want to pull up that, and remember that's the reason why we are back into the green, but also the support which came in today for the Nifty index has been the tech stocks. You had the heavy weights from the likes of TCS as well as Infosys which have contributed. HDFC Bank, that also saw recovery in the last half an hour to 1 hour of trade. HDFC having 10% weightage on Nifty, that's contributed to the recovery that we've seen for Nifty Bank, which is currently now trading above the mark of 25,000, around 25,000. And clearly the star index of the week has been the Nifty IT index, which has gained almost 4.5% to 5% in today's session. All right, I guess Neeraj is ready. Let's go across to him. Neeraj, off day is low, but more importantly, this is the 4th straight week when the Nifty is going to close in green.
Yeah, well, so that's a telling statistic. Thanks, Naveen. I didn't know about it. But yeah, a bit of a pullback in the last few minutes of trade. But really, I just want to go through this very, very quickly. Get the mid caps and small caps very quickly because the real story is out there in the constituents. Flat as flat can be. But just look at the constituents here, guys. TCS up 7%. It's 27 or 28 points away from nudging that $100 billion market cap mark. So that's the key thing. TCS up 7%. Infosys, Wipro, HCL Technologies in the green. Coal India marginally higher. And I think HDFC Bank in the last few minutes of trade really pulled that rally up and brought the Nifty Bank to about 0.5% lower, and the Nifty and the Sensex to actually nudging the green mark as well, actually eclipsing that. And remember, this is despite, look what happened to the other banking stocks. Yes Bank, ICICI Bank, SBI, HDFC, Axis Bank, IndusInd Bank. So banks are by and large down. It is some smart management out here wherein HDFC Bank has been propelled higher as a heavyweight to give some shore to the Nifty. Now small caps and mid caps, I don't think that those have changed too much. It's essentially HDFC Bank stocks, maybe like Coal India, etc., not heavyweights really out there, and TCS which continues to rise and shine, as a result of which we just close it with a marginal tick of green. Post closing we still may have a red tick, but we're ending the day marginally in the green. From a bull's perspective, that's probably not a bad sign. Navneet, broader end of the spectrum.
Well, there's a lot of stocks in the broader market which did well, and I want to start off with something like Kakatiya Cement that also featured in our Fab 4 section today. Company's Telangana plant has resumed operations, so that's the one which was locked with upper circuit 20% gains there. Lemon Tree, that had a good run up in the second half of the session. Lemon Tree finally closing with gains of nearly 14 to 15%. Kaya too surged, and Kaya's had a fantastic week. It's up almost 23 or 24% for the week, so Kaya also doing well. And goes without saying, today's day belonged to the IT pack. So something like Mindtree, where traders are still willing to take fresh long positions at current levels. Mindtree, which is trading at its record high levels, saw substantial gains. Fresh long positions were seen. And also Max Financial, that too surged in the second half of the session. Max Financial finally closed a little bit off day's high, but still good gains coming in there. And from the IT pack, once again, I've got NIT Tech, that also saw substantial gains. Bata India did well, and also something like Cyient, which came out with the numbers where brokerages maintained their buy rating. On the losing side, Eveready was under pressure right from the word go when the market opened after CCI levied a penalty of almost 245 crore on the company. And the PSU banking lot was under pressure. So stocks like Canara, Andhra Bank closing around the day's low. Canara Bank down 7%, and the other one also closing with cuts of 6%. Bharat Electronics, L&T Finance Holdings, these two counters also saw some bit of selling pressure in today's trade, Neeraj.
Well, all in all, not a bad day of trade. We ended marginally in the green, but as I think post-closing we'll show a bit of a red, really. But yeah, 10,564, maybe not a bad thing for the markets. The Nifty Bank did okay too, but I think 2 or 3 things. Firstly, the contributors to today's gains and losses, and it'll be IT on one side. Maybe HDFC Bank creeps in. Yes, it does creep in. So that one just makes a mark in the dying moments of trade by virtue of it being a heavyweight. Had it not been for IT though, there could have things that would have looked slightly different. But heavyweights have come down. HDFC Bank was actually on this side somewhere around noon. But Reliance, ICICI Bank, HDFC, L&T, heavyweights have come off. IT has helped shore up the index in today's session. And the volumes could be interesting as well as we head closer to expiry. Let's see if the volumes have picked up. Yesterday, the cash market volumes too were higher. I don't know if today's session, the NSE cash market volumes way higher, 34,000. Not so much of a pick up the FNO, but cash market volumes are
Yes, I think yesterday it was somewhere about 30,700 crores. So it's been a jump to about 34,000. So the volumes are picking up in the last few sessions, and definitely the FNO volumes have. Yesterday was the day for the weekly options expiry. But one thing I want to pull up is India Volatility Index. And Neeraj, today there's been a sharp fall in the Volatility Index. It's inching very closer to the mark of 12.5, which most of the derivatives analysts keenly watch out for. And today's drop of 6% definitely will augur well for the bulls.
Well, last but not the least, what's happened in the week as well. And let's just get that chart going. You will see technology up there in the list of the gainers because they haven't had a bad week. TCS by virtue of the gain today, but even otherwise about 8.5%, HCL Tech about 6%. But the commodity names rule. So Hindalco, Vedanta, I mean, you know, if this was the broader end of the spectrum, maybe Nalco would have featured out here too. And ITC, don't forget, this one has had a good week.
Yes.
After a long time, we saw it rally 2 days in a row, about 4 or 5%. So good going there. The losers list again, Navneet, not too surprising.
I think the oil marketing companies definitely they have to feature their HPCL, BPCL both right at the bottom, and also the banking counters which weighed on the market, something like Axis Bank that also saw cuts of almost 7%. IndusInd Bank, that's the other one which came out with its earnings. The numbers were largely in line, but some bit of profit booking was seen for this one.
All in all, not a bad week. An average week, we've returned about 1% for the Nifty 50. Let's see what happens in expiry week. Final thoughts from our experts first. Deepak Shinoy, if we still have you, one thought from you and then final thoughts from our technical experts as well. But just summing up all that's happened, do you believe that the earnings season and the corporate commentary is strong enough to convince you that there could be buoyancy, not really talking about the next 1 week, but over the medium term? Because every corporate that we've spoken to, and every corporate that's given out their views on social media, Anand Mahindra, for example, is speaking of fairly strong green shoots of recovery that they are seeing.
I mean, I don't know what to say because I think I'm getting a little worried about, you know, both the dollar and the 10-year bond yield at this point. If debt markets, if the economy was so good, then why is our debt market in such a horrible state in comparison with everything else? Because if the economy improves, tax collections will improve, and then the government's deficit will be a little bit narrower, and then the bond yield shouldn't rise to these alarming levels. It was 7.75 today. The dollar is past 66. So all is not as well as we think, and I think the RBI had a note yesterday also warning about extremely lax lending to retail individuals through personal or home loans as well. So I'm a little circumspect about recovery of an economy as a whole being green shoots or something like that. But I do feel that the industrial part of the economy is definitely recovering, which is where Mahindra would probably see a lot more recovery, both in auto ancillaries, which they also own and they participate with, and also perhaps in some level of consumer demand. But overall, I think we're not in as great shape as we think. So I would be very I would be circumspect at this point. Don't get overly bullish. I think 2018 is going to be a rough year, even the rest of it. So I would still buy in pieces and be mostly a buyer in looking for value buys or quality buys throughout the year. Not very bullish about overall economy at this point.
All right, Deepak Shinoy, we'll leave it at that note. Appreciate you joining us today and taking us through your thoughts on the market. Have a great weekend. Well, let's also get you the closing thoughts from our technical experts. Sarvendra, what about Monday? If we have a flat opening, would you go ahead and take any trade, considering this it is going to be the expiry week?
See, I think the week definitely is an important one which we are approaching, and the reason for that being that we are trading very close to that 10,550, 10,600 mark, which is the 31st Jan legacy, where all levels are. quite a few stocks at 31st, just below 31st Jan. So I think, do we clear that level next week? That is the answer I think we'll get only next week once the expiry and the week begins. The key concern that we are carrying from this weekly close is definitely the rupee. Rupee above 66 is definitely a concern. So were it not to be for the IT stocks this week, Nifty could have been easily in red and we would have had a weekly negative close as well here as well. Bank Nifty has already given a weekly negative close. So I think we are still not out of the woods as far as our markets are concerned, and same goes for the case with the US and the European markets. I think they are also near critical pullback levels and they've not kind of broken out. So everything is just there and just below medium-term hurdles. And if you were to clear everything, each one of us clears and all the indices and markets clear those medium-term hurdles next week, then probably yes, we can say that the rally could extend and the pullback could extend. But if that is not the case, then I'm afraid this pullback probably is done and over with, and the next leg probably for the world markets and for us would be on the downside. So we will leave it for the next week and see as to how it plays out.
Okay, Manav, what about you? The Bank Nifty is underperformed this week. Do you see the underperformance continuing next week too?
Actually, for the near-term perspective, as long as the Bank Nifty holds its support of 24,800, I think the structure still looks fine. But the PSU banks, I sense, will continue to underperform. Moreover, looking at the stock-specific of the PSU space, yes, most of the stocks have declined since last 6 to 7 trading sessions, and they have entered into an oversold zone. There is also a chance of a bounce back since most of the stocks have re-entered into the weekly oversold level. So I sense that 24,800 would be the important support and the key areas to look out for the Bank Nifty perspective. Once we break 25,100 to 25,150 on the upside, you can expect some sort of a reversal happen, and that could be one of the triggers which could take your Nifty beyond the 10,600, 650 zone. So for the Nifty, 10,500 on the immediate basis is an important support levels to watch out for. If this holds, I think you can expect the Nifty to expire above the 10,500 for the coming week, for the next week, and possibly a expiry could be close to the levels of 10,600 to 700 range.
Okay, gentlemen, all of you, thank you so much for taking the time out and being with us today, and have a fabulous weekend. Before we say goodbye, a quick update here. Arsene Wenger has decided to hang his boots and leave Arsenal 22 years after taking over as the manager of the club. He'll be remembered as someone who helped the English side win 3 Premier League titles and 7 FA Cups, and more importantly, as someone who changed English football forever. With that, it's a wrap on this leg of Countdown. Up next, we wrap up, in fact, all of the day's action on Bloomberg Quint's Market Wrap. Stay tuned.